Hello and welcome to Business Africa. I am Afolake Oyinloye. We'll start this week's show with the headlines. Algeria lost 165 billion over the past 3 decades to brain drain. Cameroon launches a bond loan on the Douala Stock Exchange. OPEC made an exceptional agreement on oil production. Algeria has lost 165 billion over the past 30 years. This is the estimated amount of capital lost caused by brain drain of more than 500,000 Algeria, according to Smail Goumeziane, writer and former Minister of Trade of the country. Have a look.
Algeria has lost an estimated amount of $165 billion due to brain drain from about 500,000 elite Algerians working outside the country. This is according to the country's former Minister of Trade, Smail Goumeziane, who has described the brain drain as an invisible export. In a recently published article in one of the newspapers in the country, the former minister explains that this immigration allows the host country to save $12,000 per year, a $60 billion shortfall to Algeria. He also says that by creating wealth estimated at $20,000 in a year for the host countries, Algerian managers generate some $300 billion that only favors the foreign countries. These revelations have been made when the country is currently undergoing an economic crisis caused by the fall in global oil prices.
The government of Cameroon just launched a bond loan of about 150 billion CFA on the local stock market. The last bond issuance was in 2014. This particular one seemed very promising. The government says it's a sheer proof of the level of confidence that actors in the local financial market have in the country. Jean-David Mahamli and Selina Ntombong with the details.
Cameroon's government recently launched the ECMR 5.5% net bond loan on the Douala Stock Exchange. The launch of the country's bond is said to be promising. 3 local investment service providers were mandated to raise $250 million, but 7 banks and other financial institutions have already assured the government of raising a total amount of $192 million from between September the 27th and October the 12th. This initiative is intended for major project investments, including the construction of a road linking Douala and Yaoundé and the construction of 2 dams, amongst others. This initiative is the brainchild of the African Development Bank, which encourages African states to borrow more on the continent. The interest rate of the loan is fixed at 5.5% over a period of 5 years. The government says this is proof of the level of confidence that players on the local financial market have on the West African country.
For Africa's development. And the bank is working a lot in this particular area. We're helping countries to also be able to issue domestic bonds in domestic currencies to be able to raise money, but at the same time working with the pension funds to be able to have a regulatory environment that allows them to be able to have asset classes.
This is Cameroon's 4th bond issuance. The others, which proved successful, were launched in 2010, 2013 and 2014 respectively.
We have our senior business correspondent in the studio from Africanews, Jean-David Mahamli. Welcome.
Bonjour, merci.
It's my pleasure.
This is the 4th time Cameroon is getting a loan. How do you explain this?
Oui, disons qu'à l'analyse, à l'observation,
let's say that based on the analysis, there are several reasons which can explain this. First of all, the procedure. We first of all have to say that when we compare to the Eurobond, there is a relative simplification of procedures. The second advantage we can note here is that of availability in the short term, which means that you can have money in less than a month. The last, but which is also very important, is about the interest rate.
Should Cameroon be an example to other countries in the sub-region?
When we observe the news happening in the Central African sub-region, we can say that BIAC, which is the central bank of the 6 CEMAC countries, has created and organized a financial market. If we observe, when one takes a look at the zeal of African countries, which are increasingly showing interest, we can really say that there is success.
So what's this loan meant for?
It's a good question. When we take a look at the press kit given by Cameroonian authorities, we note that the money will be used in building an efficient water supply network in Yaoundé and its environs. Also, the money will be used in the construction of dams like the Menvela Dam. The money too will be used in financing the construction of the Yaoundé-Douala Highway, as well as the construction of about 100 localities with solar energy. About 100 localities will be provided with solar energy, as well as the construction of the Gypsy port.
Now, it's the fourth time in 8 years OPEC made an exceptional decision as it reached a consensus to manage the market and put an end to the oil war. Selina Ntombong and Fatoumata Traoré with the details.
From November 2016, oil production will be limited between 32.5 and 33 million barrels per day from an August level of 33.24 million barrels. A decision taken by the Organization of the Petroleum Exporting Countries OPEC at their meeting in the Algiers on Wednesday. The decision, described by analysts as a surprise move, is the first in 8 years, as oil traders thought a consensus would be difficult to reach because of divisions between Saudi Arabia and Iran, two of OPEC's largest and most influential members. The move is a shift in the Saudi-led OPEC strategy of pumping flat out to maintain market share and put pressure on high-cost producers such as U.S. shale drillers.
We needed to accelerate this rebalancing process by sharing, if you like, the burden of adjusting the production within OPEC countries, as well as those key non-OPEC countries who have already indicated their willingness to cooperate.
The task ahead now is to have non-OPEC countries such as the U.S. to be on the same page with the committee's decision so that the process of rebalancing could be accelerated.
That report marks the end of the show. Thanks for joining us. You can share your comments on our website at africanews.com. Take care and see you soon.